the rising oil prices, 60, nearly $70 a barrel, and monetizing that and sharing that between the federal, states, and local government is worrisome to the Monetary Policy Committee at the Central Bank. So they asked to advise the government to initiate strong stabilization programs and freeze growth in its aggregate expenditure and FAC distributions. In other words, create savings needed to stabilize the economy against future oil price-related shocks. That's the advice yesterday from the MPC, and I go straight to the government at the center. Meantime, the MPC is asking the legislature to move with speed to pass the budget for 2018. That is causing a lot of delay, if you want to know. But the Legislative House says they will be sitting through that on the 19th of April and most likely pass that through on the 24th of the current month. Let's go to the marketplace. It's been a very, not a very sweet way to start the month of April and the second quarter. The stock market still bleeding a little. Yesterday we lost about 53 billion and about 105.57 on the all-share index. That's bringing up to your TV screen. Look at the red numbers there. We lost 41,000. We're now 40,749 when the market finished off less than 0.2% on Wednesday. That's midweek numbers. We also fell back on our equity capitalization. That's where we lost about close to 54 billion, down to 14.720 trillion naira, because investors keep taking profit. And questions are being asked by folks on the street. What's going on with the market? Is this profit taking, or are investors beginning to tiptoe out of this market ahead of the election fever that is expected to hit high fever beginning from August thereabout? That's the primary numbers. You can see there what we did yesterday. A very decent day in terms of volume, if you consider what came in from the banking sector. Just a minute to get to that. Value for about 6.77 billion naira. And in terms of transactions, just very active, but investors were not really interested in pricing some of these assets on to the north-south. They took a bit of profit. So you see more red on your TV screen right now than green shoots. The banking sector was down, and you can see the 0.9 to almost 1% haircut for the big banks, despite the volume in First Bank or FBN, 70 million shares, Zenith, 61 million, GT Bank, investors traded 22 million of its shares, and Fidelity, a tier 2 lender, 43 million units. That's very strong on the side of transactions, but investors were a little bit skittish when it comes to the pricing. So the sector lost that much. In consumer goods, it was almost the same story, with Dangote Sugar leading that sector to the south, 0.26% negative. Industrials managed about 0.5% to the north, but insurance followed their cousins, the banks, into the negative territory. And the oil and gas was less than 0.1%. And we'll see how that comes to play. Let's take that away. Let's roll that away, folks, and bring in the oil and gas stocks. And you see 40 Oil helping that sector in terms of a price valuation on Wednesday. This integrated energy trader still taking some gains from its recent full-year earnings of pre-tax profit, 2.70% yesterday to 41.90 on the counter. Double One PLC, however, saw almost 60,000 shares, but the price went down in the negative, to 1.08%. Then we had the small cap Eternal Oil. If you take that out there, and you can see Eternal Oil, which is a small cap in that space, down almost 5%, 4.91 to be precise, and the volume was much bigger than the other bellwethers, 1.932 billion ordinary shares. Japol, well, still trading water at 53 kobo per share, 3.64% off track, 2.735 million ordinary shares. Give us a minute. Let's go through the over-the-counter market, the NESD, which you have the unlisted securities market. That market has lost its 660 psychological reading on the index yesterday. That was 659.46, following the bigger stock market, stock exchange down by a negative 0.67%. In terms of transactions, well, quite a very good day, as it were. 3.01 million unlisted securities were traded. Let's finish off with the fixed income, at the fixed income space, and we'll go straight to the FMDQ over-the-counter market, where Treasuries was very active on Wednesday. You remember this week is a very sweet week when it comes to liquidity. We're looking at about 850 billion naira coming through into the system via the open market operations repayment, the Nigeria Treasury bills repayment, and the inflow of the fact that was decided for the Easter holiday. All that will bring nearly 1 trillion to the market space. So we're looking at the central bank beginning from today or yesterday, what the NTB auction was yesterday. Today we'll have that repayment of close to 500 billion of matured open market treasuries. The liquidity of the market, that will be what we'll be looking at from tomorrow. But these are the most actively traded treasuries at the FMDQ Securities Exchange yesterday, 153.60. And of course, if you are in the news, you already know what the second column there looks like in terms of the yield on those maturing treasuries. 26th of April this year, 13.35%. Let's have the final page out on the Naira bond. We're not expecting any primary bond auction from the debt office until the middle of the month. So we're sticking with the secondary window on the FMDQ, where the daily transactions going on. Those are the 4 most actively traded Naira paper on Wednesday. Very small, decent day, 8 billion Naira. Let's come back after the break, everyone, and check through the consumers market now that the MPC has decided to retain all key interest rate parameters. How do we take this entire decision of doing nothing or keeping the status quo to the marketplace? How does it affect manufacturers and the consumers? We have that conversation between here and Lagos.